Okay, ladies and gentlemen, I'm reviewing with you income statement from yesterday. Okay, so I have it open, but I need to review with you income statement. The purpose of an income statement is to determine your net income. But guess what? We already know our net income, because why? Your worksheet. On your worksheet, we already calculated our net income. Now, we've done an income statement before. An income statement is a permanent financial statement, meaning it always stays with the business. A worksheet is a temporary one. We only do it to get ready for our permanent financial statements. When we take a look at an income statement, the hardest part of an income statement is the top part. Before, all we had was sales minus expenses, really nice and simple. But now, because we're a merchandising business, we have to deal with the cost of goods sold. Okay, the cost of goods sold, when we take a look at it, if I'm selling you this computer monitor, $150 is not profit for me, right? Okay, so to do that in terms of all of our accounts, though, we have our revenue, which is our sales account. But for our sales account, we have to deal with our contra sales account, which is sales discount and sales returns and allowances. We add those two numbers together, subtract from sales. That gives us our net sales. Okay, that's the very first heading. That is going to be our revenue section. The next section, which is the new section that we did yesterday, was our cost of merchandise sold. This is what makes people's head hurt, and that's why I told you yesterday for your test you get to use a note card. On that note card you can have anything that you can personally write on it that will help you on the test for this chapter. Got it? Can't print something out and glue it on. You can write whatever notes you would like from anything from the chapter at all. So cost of merchandise sold. You start with your January 1st balance for your merchandise inventory. Where do we get that? On the worksheet, where? Trial balance. Okay. So because when we buy items throughout the year, it goes into what account? Purchases. Okay, so our balance of merchandise inventory on January 1st of the fiscal year is what is the balance of our merchandise inventory on trial balance. Okay, so I start with that amount. Okay, from that I have to figure out my net purchases. Calculating net purchases is just like calculating net sales. We take our purchases number, we add our purchases discount, our purchases returns and allowance, together subtract that from my purchases, and that will give me net purchases, right? Same thing we did up above on our sales account, except it's moved over a column. Once I figure out my net purchases, I add that to my beginning inventory. So I have my beginning inventory. I add my net purchases, and that gives me my total merchandise available for sale. If I add those two together. Throughout the whole entire fiscal period, that's how much merchandise I could sell. But I need to figure out the cost of merchandise sold. That's the whole purpose. I need to figure out what is the cost of that monitor. So I have the total merchandise available for sale, and from that I am going to subtract my merchandise inventory on December 31st. Okay, where do I get that number? Balance sheet. Okay, so there's two different numbers for merchandise inventory, trial balance and our balance sheet. So trial balance is going to be January 1st. Your balance sheet is going to be December 31st. And I subtract that number from my total merchandise available for sale. When I do that, that's going to give me my cost of merchandise sold. So to figure out my profit, I have to take my net sales minus my cost of merchandise sold, and that's going to give me my gross profit on sales. Okay? That was the thing that took us the longest yesterday. Below that, we just listed all of our expenses. And yes, it took you time to add up, but all you do is list every expense except, which one don't you list right away? Federal income tax, because we need to have our net income before federal income tax expense, and then we have it afterwards. Okay, so we have two numbers on there. Okay. Now, the other thing we did yesterday on 15.2 is we took a look at our component percentages. For component percentages, we always divided by sales. Okay? Yes, thank you. Sorry, I didn't realize his was still stuck there. Acceptable component percentages. Oftentimes there will be industry standards or the business will set what needs to be their acceptable component percentages. So for example, they may say for cost of merchandise sold that it should be no greater than 53%. So then you look at yours and say, does it fall within there? Now, if I'm looking at cost of merchandise sold right here, let's say that this is not acceptable. How can I change this number? This is not what we talked about yesterday. We finished at 15.2, but we didn't really talk about how can I change this number? Look at these things. What can I do differently? Can I really change my merchandise inventory January 1st? No. Can I change my merchandise inventory December 31st? Not really. So what can I change? My purchases. Would you agree? So if I'm taking a look at my cost of merchandise sold component percentage is not acceptable, I might need to find a new vendor. Okay? Instead of finding somebody that can sell me this jacket for my cost at $30, I'm going to find a different vendor that will give me a similar jacket at $27. What would that do to my purchases? Make it go down. If that goes down, what's going to happen to this number? Then that will go down, and what will happen to my component percentage? Go down. Now, what if my gross profit on sales percentage was not correct? What can I change to make it be acceptable? What numbers help calculate this? Cost of merchandise sold. So how do I control this? My purchases. Would you agree? What else controls this? Net sales. So what could I do? Sell more. Maybe I could increase my price, but sometimes when you increase your price, it can reduce the amount of sales. But that's really what you look at in order to figure out how to fix it. You have to take a look at what numbers can I control and change. Now, what if my expenses are too high? What do? Spend less on expenses. Does that make sense? Okay. And if your component percentage on net income is not correct, what options do you have? You have expenses. We have changing our cost of merchandise sold, and you have changing your revenue. Would you agree? Because if you change your gross profit on sales, pretty much you're changing one of the two above. So you really look at, depending on where the percentage is, you have to change something above it in order for that component percentage to be acceptable. And they will always tell you what their goal is. So you don't have to say, is this an acceptable component percentage or not? They'll say, this is what the business standard is. That's my fast review of what we did yesterday. We're ready to rock? Okay, let's go ahead and take a look at 15.3. This is started, it's set as graded, but am I grading it? No. Do we have to do the on your own? Okay. Just making sure you're following me. Okay, so we have switched from a sole proprietorship to a corporation. And in order to do a corporation, we have to go through and take a look at my statement of stockholders' equity, because that's who gets the profit of a business. Okay? So when we prepare a statement of stockholders' equity, we have two sections, and it's important that you understand these two sections. The first one is capital stock. Those are physically the shares of stock that we have in a business. Okay? They will always tell you the number of shares that were issued at the start of the year and then how many were issued throughout the year. And we just do a little bit of math. This is pretty much like your owner's equity account. Okay? The other thing that we have to calculate is going to be our retained earnings. Retained earnings is going to be the additional, how we take that net income and put it back into the business, whether or not we're paying dividends or not. Okay? So we'll take a look at, we have to prepare a statement of stockholders' equity for the current year. As of January 1st, Interstate Tires had issued 100,000 shares of capital stock with a par value of $1 per share. During the fiscal year, the corporation issued 10,000 additional shares of capital stock. Now, the other thing that they gave you on here is going to be their income statement and a worksheet. So they give us our previous financial statements. Why do they have to give us the income statement? Exactly. You have to do your income statement first. That's the first financial statement that has to be done. From that, you take your net income and you divide it between your shareholders. So you can't do your statement of stockholders' equity before you calculate your actual net income. So on the very top, we're going to do the name of our business, which is Interstate Tire. The name of our document is a statement of stockholders' equity, and a statement of stockholders' equity is prepared for the entire fiscal period, so it's going to be for year ended December 31st. Now, the first section that we have on here is going to be capital stock, and that's followed by a colon. Now, I don't necessarily know. I will try to look up and have this answer for you right now. On your final, they might not have, or on the test for this chapter, they might not have all these words filled in. I will let you know before I leave today, because that might be something you want to put on your note card as well. Does that make sense? Okay, so here we have to do the math. They said there are 100,000 shares of stock issued, and what is the value of each share? $1. So I take this times that to get that number. Is that easy enough? And it's not always going to be $1. It could be $7. It could be $15. But these numbers they will always give you in the directions, because you can't find it on an income statement. So that's going to be $100,000. Now, how many were issued during the year? 10,000. Now, to calculate that number, we do not just take 10,000 and put it here. What do I have to do? Multiply it by its per share, but it is $1, so it actually is that number, but it's not always just transferring that number over. Does that make sense? You always have to multiply it by the per share value. So that's going to be 10,000. So what is our total balance of capital stock? 110,000. Now, if I look at my worksheet, look at my worksheet right here. Capital stock, what's my value? 110,000. So if on your worksheet you have capital stock of that value, it needs to be the same there. Does that make sense? They have to match. And you're just showing how you got that 110,000. You may have some businesses that do not issue any shares of stock that fiscal year. It could just be whatever they started with at the beginning of the year, and that's what they have at the end. Okay? So the next section that we're going to do is going to be our retained earnings. Retained earnings is that fancy word for what are we going to do with the net income. Now, not all businesses take the net income and just give it all back to its stockholders. They may keep some of it because they have future projects. Maybe they want to remodel their building or they're going to buy some equipment. Instead of getting a loan, they hang on to their net income. So that you need to get the balance of retained earnings. So you need to look on your worksheet, find your account retained earnings, which is $46,599.48. And that's going to go right here in the middle. Again, I got that number right from my worksheet. Okay, so the next number they ask for is your net income after a federal income tax. Well, that is on your income statement. We've already calculated $62,907.35. Dividends declared. I go back to my worksheet. We've talked about dividends. Dividends is what the company decides it's going to give back to its shareholders. So this business has decided they're going to give how much money back to its shareholders? $8,800. Okay? Now, if we look at this numbers, this is their profit they had this year, $62,000. They're giving $8,000 back to its shareholders. So is their retained earnings going to go up in value or down in value? We have a net income of $62,000. So that's profit our business had. They're taking $8,000 of that $62,000 and giving it back. So we're going to have a net increase. Okay, does that make sense? Because this is greater than that. You could have a business that gives dividends greater than their net income because maybe they had extra money set aside. They tapped into some of their beginning retained earnings. So this number could, in some cases, be a net decrease. So this word right here can change. It's not always net income. You have to take a look at which one is bigger. Businesses sometimes will say, hey, we're doing fine. We have extra reserve. We're going to pay more in dividends than we had in net income. And it's not a bad business practice. They're just giving more money back to its shareholders. So what I need to do is I need to take $62,907.35 and subtract $8,800 because that is how much my retained earnings is going to go up. And when I do that, it's going to be $54,107.35. So if this is my net increase, oh, I screwed up my number. What am I going to do? Am I going to add or subtract this? Add. What if it said net decrease? Subtract. Let me get the right number up there, though, because that obviously I did not hit my cents right on that one. There, I got my decimal point now. Okay, so I'm going to add 46 and 54, so that gives me new retained earnings of $100,706.83. So now my total stockholders' equity is going to be these two added together, right? Just add down. Because I had capital stock of $110,000, I have retained earnings of $100,000. Add those two numbers together, and that will give me $210,706.83. Now, we don't know if this is right yet. How we can prove that this number is correct is when we do our next financial statement. On our next financial statement, we have to do our balance sheet. The purpose of the balance sheet is to balance what?
Accounts?
Nope. Close.
Oh, accounting equation.
Yeah. Accounting equation. The very first thing I taught you, remember I said no matter what we do in this class, the accounting equation needs to stay in balance. The purpose of a balance sheet is to prove that accounting equation. And what is the accounting equation? Assets equals liabilities plus owner's equity. In this case, it's stockholders' equity. Your stockholders' equity number you cannot take from your worksheet. Where do you have to get it from? Right there, what we just calculated. Your balance sheet will never come out if you take your stockholders' equity numbers from your worksheet. It won't because your business was in operation and hopefully it made money, so the balance of your stockholders' equity will go up. So when we look at 15.4, because this is 15.3, that was pretty short, right? Let's go ahead and save that. And let's take a look at 15.4 then. Now, this balance sheet is different than our last balance sheet. Okay? Just as a reminder, our last balance sheet, we had a column on the left-hand side for numbers, and we had a column on the right-hand side for numbers, and on the very bottom, the left side needed to equal the right side. Okay? Our business is too big to use this, and we have to deal with some other things, so we can't. Because we have some contra asset accounts, like, for example, accumulated depreciation store equipment. Okay? We have store equipment, which is an asset. It has a debit balance. But accumulated depreciation store equipment, what does it do to the value of our equipment? Lowers it. So we have to go through and subtract those. So we have to have multiple columns. But what you need to realize is there are two spots on here that your numbers need to equal. Because one of the things we know about accounting is there's always a way to check your work. This number right here, right there where the double lines are, must equal this number. If it doesn't, you've made a mistake. Okay? Right above these double lines, right here and right here. I'm going to make it a little bit bigger. I forgot to do that on the early one. Is that better, Alexis? So right above that double line and that double line. Okay, so we're going to go ahead. I'm going to take a look at the instructions. Pretty much the instructions say, do a balance sheet. And a balance sheet is assets, liabilities, and stockholders' equity. Assets are going to be on the top, followed by liabilities, and then stockholders' equity. We just need to get all of our numbers from our worksheet. And guess what column we get them from? Balance sheet column. Do not make the mistake of getting it from your trial balance, because that's going to be before adjustments. So you know exactly what all accounts are going to go on there because you look at your worksheet and get those numbers from the balance sheet column. So let's start at the top. Name of our business is Interstate Tire. Name of our document is a balance sheet, and the balance sheet is prepared on a specific day, so it's going to be December 31st. So they're saying on December 31st of this year, this is what my accounting equation equaled. Okay? We have three headings. The first heading we have is assets, and that gets centered on the top. And then we go through and list our first asset account, which is cash, and, current assets. We have two types of assets. We have current assets and we have plant assets. Current assets are going to be ones that are easily transitioned into cash, and then we have plant assets, which basically are going to be like equipment type of items. After our heading of current assets, then I'm going to do cash. And cash has a balance of $12,848. And again, getting those numbers just directly from the worksheet. Petty cash has a balance of $300. I have accounts receivable. That number goes on the right-hand side because we have directly below accounts receivable, I have an account that has a credit balance, and that is a contra account to its account that takes away from its original value, and that's allowance for uncollectible accounts. Those are the naughty people that aren't going to pay. So I'm saying that I have accounts receivable of $18,000, but I'm estimating I'm going to have $2,527.29 that are going to be uncollectible. So I need to subtract that from it. So below accounts receivable, I'm going to say less allowance for uncollectible accounts. Now, as a heads up, notice that I have two spots here for numbers, so guess what I'm going to do? Do you see that there's a number column here and a number there? So I'm going to subtract these two and put the total there. My next asset is merchandise inventory. Get your number from the trial balance. And that needs to be 188,999.25. Supplies office, 854.59. Again, you have to get it from their balance sheet column. Supplies store. What's that? Balance sheet. Did I say trial balance? Sorry, always balance sheet column when you're preparing it. I'm sorry, I did not mean to confuse you. Thank you for calling me out on that. Below supplies store, prepaid insurance. Below prepaid insurance, you're going to have total current assets, and you're going to add down the middle column. Bless you. Did somebody get a number for total current assets? I don't agree. I don't agree. Yes. 2, 2, 3, 2, 1, 4, 13. Here's where you're like, I don't agree. I'll find a number I agree with. You are adding down these numbers right here. Only this column, because this 15,000 is already from over there. Does that make sense? So you're only adding down that middle column. So that is our total current assets. The next thing I need to do is my plant assets. And those are the assets that have a depreciation. So I'm going to do office equipment. Less accumulated depreciation office equipment. And now again, look at, I have 2 spots here where it's telling me I got to put math in. Guess what I got to do? Subtract. Okay? Mm-hmm. Well, that's math. These 2 subtracted. Sorry, the 4, 7. I thought you were asking the 13. Like, the 13 I got there, but that's really math. I'm doing what it says. Office equipment, subtracting my depreciation. Ask the first question. You see where I got the 18,000? You found it? You got to make sure you use the balance sheet column. Okay. The 4,000 and the 7,000 number up here, I did mathematically. So now you have to have your total plan asset. Which column are you adding for total plan asset? Only the middle column. I'm only adding these 2 numbers up. Okay? Only the 4,741.13 and 7,947.62. And that's going to be my total plan assets. Okay, those 2 added up go under total plan assets. Then I have total assets, and guess what I add up for total assets? Total current assets, total plan assets gives me total assets. Kyler, you have lots of work to do. Get off of there. Now, I have my total assets number. Now, this is an important thing because my bottom number needs to equal that. If it doesn't, somewhere, somehow, I've made a mistake. Directly below my total assets, I'm going to do my heading of liabilities. Because the purpose of a balance sheet is to prove that my assets equals my liabilities plus my owner's equity. So my three headings, my three account classifications always get centered on my balance sheet. So I have liabilities here. Now, liabilities are easy to identify because what word do they have in them? Payable. If you see the word payable in an account, it is a liability. So you are going to go off your worksheet, starting with your first payable account, which is accounts payable, and it's going to go all the way to dividends payable. You're going to list them here, and you're going to have total liabilities. Okay? So these have a heading called current liabilities. We could also have long-term liabilities, which would be like a loan or a mortgage, but we don't have any of those right now, so it's just going to be current liabilities. I can't help you right now. Yep, go right ahead. I'm not going to add mine up. I'm just putting the rest of the words up there that I can talk with you in just a moment. For all things that your business owes, that's the definition of a liability. Anything that you owe, and we owe all of this. Federal income tax, employee income tax payable from our payroll, Social Security, Medicare tax, both all from our payroll. Sales tax payable, we owe that to the government. Unemployment tax payable, federal and state. Health insurance premiums payable, United Way donations payable, U.S. savings bonds payable, and dividends payable. Dividends payable is the amount of money, again, that we give to our owners, our stockholders. Okay? Now, I purposely have these numbers blank because where do I get those numbers from? Not here. Statement of Stockholders Equity, which they gave you here. If you take your numbers from your worksheet and put it here, it will never, ever, ever come out. We do our financial statements in this order for a reason. Income statement, statement of stockholders' equity, and a balance sheet. We have to do them in that order because your net income determines what money goes to your stockholders' equity. Your stockholders' equity needs to be updated in order to have in a balanced accounting equation. So those three financial statements go in that order. Okay, so really there are four sections to this chapter: an income statement, looking at your component percentages and analyzing it, that's 15.2. 15.3 is preparing a statement of stockholders' equity, and then 15.4 is preparing a balance sheet. So there, you guys got 4 days of learning in 2. Aren't you really excited? Yes. Oh, Preston's on me today. Great. You know this number needs to equal the one above, right? Except 902.235, 902.88. These two numbers need to equal total assets, total liabilities, and stockholders' equity. These numbers, again, we just get right from our statement of stockholders' equity. Whoa. That's chapter 15 on crack. You're welcome. Now, what you will have, again, this is set up as graded because I wanted you to follow along and be able to see what we did here. I am not entering it into PowerSchool. You will already see that I have all of your assignments for the next 2 chapters already entered in, so you'll see which ones are graded, so these will not be entered in. You do have work time all day tomorrow to work on your application. Bring your book. Seniors, you are going to need to turn in your book next week. Mrs. Thoreau will be collecting them, and she has your book numbers, which ones you need to turn in. Okay? So make sure you're ready to turn those in to Mrs. Thoreau next week as well. So seniors, again, your last test is going to be this chapter. That is going to be your final. The other thing I'm going to look up for you right now is to see whether or not the words will be on your statement of stockholders' equity or if you're going to need to fill them in.